Hey there, my name is Pete Buchwald and I want to share my thoughts on creating a growth portfolio for financial wealth in 2021. I have nieces and nephews that are like 18 years old or so, and I want to help get them set up with portfolios, so I've been thinking that through. So that's one impetus for this. And also, let me show you on my screen here. I've been doing some options trading, which the short way to think of it, I think, is if you've ever wanted to do real estate investment, where you have an asset and you're able to get income off of that asset, I think of options as a way to do that. So you don't need a house, you don't need to go deal with the furnace going out or a plumbing problem. I mean, there are other things that can go wrong with this, so it's kind of a good parallel, I guess, or a good illustration. But that's kind of what I'm doing. And so my question is, if I set up a fake $10,000 portfolio trading options for 1 year, and I set up another portfolio of just buying and holding the most promising assets I can think of, I'm trying both of those, trying to do my best with both of those and seeing which one does better and how they perform over time if through 2021. So I thought I would share my picks for stocks. I'm not a financial advisor. These are stocks and ETFs and a little bit of cryptocurrency to hedge or to kind of have a piece of that. So here, let me just start sharing. So just for a point of reference, if you're curious about my past track record, over the past 3 months, my portfolio in E-Trade is up about 33%. Last 6 months, I'm up 70%. Last 1 year, I'm up 75%. Past 2 years, I'm up 104%, 105. And then over the past 3 years, this portfolio or my investing is up 140%. And some of that is probably just, dumb luck. I'm maybe if I would have done things in a different way, these things would have even been higher. But most of my profits, I would say, are from Tesla and from genomic technology, human genome therapy sorts of things. So with that, let me show you my portfolio, talk you through my picks, and if you want to trade some of these, go right ahead. I mean, do some research is what I'm going to say. Like, if you want to, don't just buy this based on my advice, but please seek other advice and look into these companies and resources on your own. I will put links to Robinhood and some other exchanges in my notes. If you have a friend who has Robinhood, ask them for their referral number and hook them up with something. But if you don't have anybody else to turn to for codes for signing up for any of these resources I'll talk about, I'd appreciate if you use my links. But yeah, hook up your friends first. Then if you don't have anybody else to turn to, maybe use my referral links. Thank you. Okay, so in terms of, I want to show you my profits for trading options. I think this is 2 months. This is with 2 months, so October, November for NEO. I was mainly doing put options, which mainly it means I promise to buy the stock if it goes this low. It is a contract you get paid to hold. And if it never gets that low, you get to keep a premium. You get to keep money. So it's kind of funny. Like, I'm making all this money off of stock I never owned, and that just blows my mind. So I have a system for this, and maybe I'll make a video on that at some point in time. And I acknowledge it. Some of this is luck. I mean, I'm one headline away from disaster with these sorts of positions. So that's the risk I'm taking. I'm basically holding an insurance policy. If the stock takes a nosedive, I promise to buy it at a higher price. That's the contract. So here's Snapchat. That's not a good example. all that to say, I'm making about $50 a week in options. I say ballpark. And I want to compare that to just buying and holding these companies that I believe in, because the downside of the options is these underlying things that I'm not putting money in, and they're going up significantly, and I'm missing out on those gains. I tend to take small positions in these companies and then buy options on top of it, but I'm not always able to do that. That leads to the experiment of I want to compare options, which is that treating your cash or a stock like a rental property and making money off of that asset versus just buying and holding stocks. All right, so that's quite a setup. I apologize. I was a little bit long-winded. We can just pretend we're hanging out, having a cup of coffee, me and you. My coffee's gone, but I can pretend to drink it. Okay, so here are my picks. And I kind of laid them out roughly in my order of priority, and the way I set up this portfolio is it's a $10,000 portfolio, and 50% of that is in ETFs. An ETF stands for Exchange Traded Fund, and it's a collection of stocks that stay consistent to a theme or an idea. So I will point out these stocks to you. A lot of them are ARK ETFs. ARK is an actively traded ETF, which means that there's a whole team of people look at computer screens who are experts in all these different areas that are adding and subtracting from this portfolio. So as you go golfing, as you go about your day-to-day, there are people managing this portfolio day-to-day, and they're very transparent. If you want, they can send you emails as to their trading, and I think I signed up for that, and it's pretty interesting to see what they're buying and what they're selling. And they're not selling because they think a stock is going to take a nosedive. They're selling usually to balance their portfolios because something is accelerated so fast that it's carrying too much weight in the portfolio. Sometimes they're selling because things are just for other reasons, to protect the portfolio. Okay, so let's take a look at this portfolio. Let me start. The first ones I entered were at the bottom of this list. So I put in the ARKG fund. So here are some of the holdings in the ARKG fund. And a lot of these companies you may not have heard of. The idea here is this is a new field of medicine. It's emerging. All of these ETFs and most of these companies, I've invested with the philosophy of what's next. And some of these stocks, like Apple, you're going to see, like 10 years ago, they were what's next. But just because they were what's next before, it doesn't mean they're not able to be what's next in the future. Does that make sense? But ARK ETF specializes in emerging disruptive technologies and ideas. So these are in the medical field, and the idea is instead of giving a person a pill, we want to treat disease and prevent disease, reprogramming DNA with genomic products. So I believe there's a device they would attach to your arm with some of these companies, and it reprograms your DNA like your computer, and it rebuilds your DNA in a designed way, which is going to be huge in the next, I don't know, 1 to 30 years. This is going to be a huge thing, is what they're saying. And I know there are other companies like BNGO is really huge this week in the news with being emerging in this, but it's a little bit speculative or maybe overpriced at this point. But anyway, that's the idea behind this ETF, that it's an ETF for genomic therapy. And for each of these, I try to pick a top company, and I buy a little bit of that stock. And so in this portfolio, I picked CRISPR. I've done really well with CRISPR. So that's my pick here as a genomic company. Yeah, so I want more exposure. For a lot of these ETFs, I pick one of the top stocks and take an additional position in them, because my thinking is if ARK loves that company and puts it at the top of their list, with a high-risk growth portfolio, it makes sense to me to take a stronger position in the companies they believe in most. My next company is Apple. I don't think I need to explain anything about Apple. With their new iPhone 12 coming out and 5G technology coming out, they're talking about making an electric car. This company is not going anywhere. I think they're in less danger of any of the lawsuits, the monopolies, but I don't know. They pay a little bit of a dividend as well, meaning I think it's every quarter, they send you a check in the mail just for holding the stock. Next one is PBW. This is a stock, or excuse me, an ETF that's done really well in my portfolio. It's a green energy play. So with a Democratic president coming in and clean energy being a thing, it should do pretty well. So here are some of the holdings. You might be familiar with some of these companies, you might not be. And we'll see some of these companies in the portfolio as well. Okay, so let's get back to the portfolio. Clean energy. And this one pays a small dividend as well. ARKK, so this is the ARK Fund's technology sector. Technology, so I think their top holding here is going to be Tesla, but then other things like Roku, CRISPR, here's our friend CRISPR, Square, so when you go get a cup of coffee and they have that little white square you swipe with your credit card, that's Square. Teladoc, Spotify, and you can see the whole thing. If you go to the ARK website, you can see their whole list of holdings, and they update that every day. Okay, let's see, what's next? Tesla. I believe the Tesla story is not over yet. They're building new factories all over the world, and I think it's going to keep growing and keep doing well as a company. It just got adopted into the S&P 500 index, which is a big deal. So I don't think that story is over yet. ARKW is ARK's fund for web services. So let's take a look at some of their holdings. Tesla again, Roku, Square. Grayscale is a Bitcoin exposure thing. So monetizing the internet a little bit. Teladoc, Spotify. Tencent is a Chinese company. Facebook, Snapchat. So those types of things and others. Let's take a look at some others in the portfolio. Where's my portfolio? Did I go forward? Oops. Okay, here we go. Next. OGIG. So I think this is Kevin O'Leary is his name, the guy from Shark Tank, the bald guy. Usually I don't like him, but lately I've watched some of his YouTube videos, and I think on Shark Tank they kind of asked him to be more of a jerk to get drama on the show. So I think he kind of intentionally is a jerk a little bit, but he's on YouTube. He's pretty cool, and he said some things I really like in some of the interviews I've seen. But anyway, the OGIG is one of his ETFs, and he noted that with the pandemic kind of winding down, there are certain fields of technology that people have adopted. So online shopping, just all kinds of online stuff mainly. And those companies, he made a collection of some of those companies. So kind of like the new era, the things that have kind of been adopted and are going to continue to be successful. And I think in terms of timing, this is a good time to buy this, because now that there's a vaccine out, some of people sold these companies thinking, oh, these are done, you know. But these are not going away. I mean, you saw the ARKW fund, Teladoc is still there, seeing your doctor through the TV screen. But that company is not going away, and ARKW is scooping up that stock in a huge way. And so all that to say, those companies are on a discount now, I think. So buying something like OGIG right now could be a good play. But there are other companies in here as well, like I think there's a list if I scroll down. Amazon, Google, Facebook, Shopify. But there are other things like bundled software, cybersecurity, I want to say. CrowdStrike is a big one. Roku, Netflix, ServiceNow. So a lot of software services are in here also, like Adobe, Salesforce. So this is a collection of stocks that I feel pretty good about. That is a good diverse set that I think will do well. And like I said, I think it's kind of on sale right now. Okay, what's next? MAXR. So MAXR is building an infrastructure of satellites, and so as different companies want to do different things that need satellites, whether it's space travel or communications or whatever, they need satellites. And so this is a satellite play, and they've done some good things. I mean, a lot of people are really excited about this company, and I think it's positioned pretty well for growth. It's a little bit speculative, but hey, that's why we have a diverse portfolio. It seems like a good company, and I think they'll do well over the next 5 years or so. Let's see, what's next? Snapchat, I think we all know that. I've got 2 teenage daughters, and I'm a college teacher, and I can tell you that Snapchat is a reality. Social media is always tricky. It could go the way of MySpace. You know, who knows what might be the next cool thing, but it seems like Snapchat will be here for a while. It's very much a standard. I even know young adults that have tried to quit, and there's an addictive property to it, and they keep coming back to it. They need it for communication with groups of people. It's a part of their lives for these young adults. NEO. So NEO is, some people call it the Chinese Tesla. It's still emerging. A lot of people are really adopting it, want to get in early. If they missed the Tesla boat, they want to get in on this one. It's growing. It's a Chinese company, so for better and for worse. It adds some international exposure to this portfolio. And China is committed to having a large percentage of electronic vehicles on the road by 2025, I think. And NEO isn't just electric automotive, it's a brand and a lifestyle. They have these little cafes where you can sit down. If you own a NEO, you can go into these cafes and hang out. It's almost like, I don't know if they still have them, but the airlines have those clubs where you go in the airport, and if you're the gold card member, you can go into their little room and have a coffee and sit in these nice chairs and stuff. They have those sorts of things for NEO owners. It's a good company, NEO. A lot of people are excited about this one. So we definitely got some shares of NEO. It's grown a lot, but I think it has room to grow over especially the next year or 5. NEO. And hopefully it comes to America. They have an office in California. It'd be great to start seeing these on American roads. Okay. Let's see. What's next? Square. I don't need to say a whole lot about that. It's point of sale technology, a little white square that businesses will have to swipe your credit card. TQQQ. Now this is an ETF. It has exposure to the big 5, to Facebook, Amazon, Netflix, Google, Apple, but it is a leveraged ETF. So we're only taking a small holding of this. This is dangerous. They say you're not supposed to hold this sort of thing for over a long period of time. So we're taking a small position of this. Leverage means, think of it as if I put $100 in, the fund puts in an additional $300. So I have $300 or $400 worth of exposure, but I only had to put in $100. So it could go up. If those funds go up 3%, this fund goes up 9%. If everything goes down 10%, this fund goes down 30%. So it's pretty crazy. But if you believe in those companies like I do, I don't think they're going anywhere, even though there are lawsuits going on. That's how I'm getting exposure to the big 5. And I'm using my money and somebody else's money to get that exposure. I don't have to spend $300 for that exposure. I'm paying $100 and getting $300 worth of exposure. That's the way I think of it. CRM. This is Salesforce, which it's been a while since I've looked into so many different things, but this is online software bundling, helping out businesses. It's a big deal. I remember that. And it's getting good. Analysts are projecting a lot of growth with this. So I think that's a good play. And lastly, we've got a little bit of exposure to cryptocurrency. So it's 10% of this, no, 5% of this portfolio is in cryptocurrency. So I bought $250 worth of Bitcoin, and it's already up to $268 with a big surge today, and $250 worth of Ethereum, which is up to $261. The stock market hasn't opened since it was closed for New Year's, but the cryptocurrency market is always open. The thinking with the cryptocurrency is with all the money we're pumping into the economy, it's going to make the dollar weaker, and people are going to look for stores of value for their money. Older people might be gravitating to gold and silver. I've done that sort of stuff also. I have a little bit of exposure to precious metals like nickel and silver, lithium, these sorts of things. Electric vehicles will need some of these things, and silver is supposed to do a little better than gold, so I have a little more of that than I do of gold. But they say for young people, these digital currencies are probably a good play. They're from the investment standpoint, a lot of investors like exposure to this because it's a high speculation, high growth possible area, and so it's attracting some big money as well. It's got institutional adoption. These huge banks, hedge funds, that they are all taking big holdings in this. So it's not the Bitcoin that we had back in 2016 and 17. It has a much stronger foundation. And though Bitcoin is probably going to have a great year, they say that Ethereum, which is maybe the second most popular, it is the second most popular coin, that's going to grow more percentage-wise. So that's why we have exposure to that as well. And there are other coins as well that you could get into, but I think it's good to have Bitcoin and Ethereum. Let me show you another link. If you get some cryptocurrency, it makes sense to me to put it in an interest-bearing account. I have mine in one called BlockFi. Two others that people like. One is Celsius, another is Nexo. I don't like those as much because in order to get the stronger interest rates, you have to buy the cryptocurrency associated with those platforms. And those particular coins can be kind of tricky to deal with. So BlockFi is a little easier to deal with, and it pays really good interest. So if you just grab your Bitcoin and you throw it in here, you can get 6% interest a year. So you put in $1,000, you get $60 worth of Bitcoin, assuming it stays the same. If it were to stay flat, $1,000, you would still have a gain of $60 worth of Bitcoin. So that's pretty good. And Ethereum, 5.25%. So that's great. You just kind of stick it in there and leave it, and it kind of starts getting you some compounding interest. It pays out every week, and so you're getting interest upon that interest every week. So yeah, that's what I would do. In terms of buying cryptocurrency, I would buy it through Coinbase. Let me pull up Coinbase. And don't buy it through the Coinbase app. Instead, make sure you get a Coinbase Pro account, because it's a lot cheaper to buy cryptocurrency through the Pro app than it is through the regular Coinbase. So I suggest that. And here in the app, something really cool is, I was surprised how much money you can make of free cryptocurrency if you just go to their Earn Rewards tab. and you start watching these videos. I took a half an hour and I made $30 worth of cryptocurrency that I quickly converted to Ethereum or Bitcoin or something, and then put it in an interest-bearing account. But I was shocked. And they keep adding different new promotional things. All you do is watch these videos. While the video plays, there's a multiple choice exam below. And if you think you know the answer, you can click on it. And if you guess wrong, you can guess again. It's so easy to earn this. And then once you get the answer right, you can just stop the video if you want and go to the next quiz. And you made $2 or $3 in a cryptocurrency. And it's real easy in the app. Once you have this weird cryptocurrency you hadn't heard of, you can instantly convert it to Bitcoin or to Ethereum, which I did. Or you can hold it if you want. It's up to you. I'm not going to linger too long on cryptocurrency, but another way to get free cryptocurrency is to download the Brave browser. You can see that this last month I've earned $1.72 with this, and I've avoided a lot of ads and trackers, and it's a very private browser, so even if you don't like cryptocurrency, it's a good browser to keep spying eyes out. People like it for that. But it pays me out every month in a cryptocurrency, which usually I convert to Ethereum or Bitcoin, but right now I'm holding some of this BAT cryptocurrency in an interest-bearing account also. All right, so those are my picks. I'm sticking to it. I'm curious, those of you who are trading stocks, what would you have had in your top 10 picks for stocks or ETFs? I had 50% in 5 ETFs, and then 10 picks to spread out the other half of the portfolio, including Bitcoin, I guess. Sorry, the disc on my camera just filled up apparently. But yeah, if you have stocks that you would suggest, or something you would add or take away from this list, I'd be curious to hear your thoughts. All right, thanks. Take care, guys. We'll see you.